GMB Pros, welcome everyone. Richard, Jonathan, I appreciate you guys joining me here live. Those that are catch the replay, thank you everyone for hopping on here with me. If you're catching the replay, uh, just kind of to put out there again, GMB Pros, my ultimate goal and Williams' ultimate goal is to help you. One, either with our guest speakers that we have on here. One is to help you with your agency to get more clients or run a better agency, or two, help get results for your clients. And what I love is with our guests, it's not only telling you, but over the shoulder, showing you what that looks like to help you advance. Today, he's kind of a part of the program now, right? He's part of the building. We have Matthew and Drew. Today's actually Drew's birthday, so those of you that follow him, make sure you hop on there and show him some happy vibes, some good wishes for his birthday. We're blessed to have another year to be of service to everyone. So make sure you shoot him a message of love there and wish him a happy birthday. Matthew, what's going on, man? How you doing?
I'm doing great. Thank you guys for having me again. It's been a
Absolutely.
while. 2 whole weeks, right? I
Yeah,
believe.
yeah, yeah.
So good to see you guys again. And this is one of my favorite topics. I don't think you can talk about it enough, but we'll change the focus a little bit today.
Cool. Awesome, awesome. Yeah, brother, go ahead and go ahead and dive in and get the ball rolling.
Cool. All right, everyone. Welcome back to another episode of GMB Pros. Today, we are going to teach you how to become profitable today. Today. Some of you might have seen our other videos on being profitable. If you have, if you are in here or you have more questions, feel free to reach out and ask as many questions because I can talk about this topic in a lot of different ways. So the first thing we're going to talk about for becoming profitable today is what does that take? How do I become profitable? And what does it even mean to become profitable? Well, the first thing you have to understand, and you're going to hear me say this a lot, is it doesn't matter how much you make, it matters how much you keep. Okay. So a lot of times we're trying to focus so much on how much income I can bring in, how much income I can bring in. And of course, income is important. That's very, very important. But what happens when the income comes in? What are you doing? Are you spending every single penny? Is all of your money getting mixed in with your personal expenses? Are you combining your personal expenses with your business account? Do you have a credit card that's on your personal name, but it should really be under your business name? These are rules that you shouldn't be breaking because it steals it from your profit. And so what we need to learn is how to make sure that we are profitable today. And in order to do that, you need to pay yourself your profits first. Okay? Profit comes first. When we were taught in school accounting, the first thing I went to school for college was accounting. And the first thing they did was write a formula on the board that if any of you have ever read any financial books in the world, from like Rich Dad, Poor Dad to any other millionaire books, you're going to see that what I learned in accounting in college that day was completely incorrect. Okay. What they wrote on the board was sales minus your expenses equals your profit. So you make a sale, you pay off all your bills, and you pay off everybody that you need to pay off, and then you make another sale and you pay off all your bills, and you right. And if anything's left over, then you try to keep it for yourself as a profit. Okay, but that's the wrong formula. The formula that millionaires follow is sales minus your profit equals expenses. Your profit comes first, and you survive off of everything that's left over. The same way how in World War I and World War II, our grandparents and great grandparents were putting money in away in envelopes, and one envelope said food, and one envelope said electricity, and one envelope said et cetera, et cetera, et cetera. And then we took a portion of that and made sure that everything was accounted for. You need to be doing the same thing inside of your business because accounting is a liar. Okay, accounting allows you to lie. What do I mean by that? Okay. Well, if you want to sell your company, you're going to go get your company valued. Okay. And so let's say you own a real estate company and your real estate company has $5 million worth of real estate sales. But in order to make those real estate sales, you obviously need real estate agents who are going to pay the commissions on those sales. You end up paying $4 million in commissions. Are you really a $5 million company? Absolutely not. You are a $1 million company that manages $4 million in assets. Okay? There's a huge difference there. And that changes the way you deal with your money. So if you're running around thinking you have a $5 million business, then you're trying to spend money like a $5 million business, but you don't have a $5 million business. And that's the problem. Accounting would allow you to say that because accounting only cares about balancing everything to zero, knowing where every penny is spent. It doesn't actually care what's going on with the money and if you're making good financial decisions. Accounting, it's in the name. It's just counting. That's all accounting is. It's counting. Okay. So you don't want to use the accounting rules, which is what you're using every day, which is I'm going to make a sale and I'm going to pay all my bills. And I'm going to make a sale and I'm going to pay all my bills and then I'm going to survive with what's left over. Stop doing that. How do you become profitable today? Go into your bank account right now, right? Literally this second, while you're hearing me talk, and take 5% of all of the money you have in there and just put it somewhere. Call it profits and don't touch it. Now you're profitable. As long as that money stays in that account, your business is always going to be in profit because you always have money that wasn't spent. So now maybe this month that account has $50 only. And then next month it's $100. And then you make more sales and it's 200 and it's 500. Now the actual value of your business is growing. You have money growing that you can count on forever. But like, how do I do this? Like, what do I, you know what I mean? How do I do this? I can't do this right now. I can't pay myself profit. I'm broke. I pay myself 70% goes into my expenses, and then I take 30% of it and pay my house bills. If I don't do that, I'm going to suffer. I'm going to like my business is going to fall apart. That's wrong. Okay. There is a way to do that very, very slowly and incrementally. So the question is how? And it's going back to what we said about the world wars, what our grandmothers and great grandparents were doing, putting money in envelopes for specific purposes. So your business has to have an account where money comes in, sales comes in, but bills never leave this account. Bills can never, ever. You don't pay people out of here, outsourcers, employees, nothing. Okay. So you always know how much money is coming in. And then you need another account called operating expenses. And income, sales are never allowed to go into this account, ever. Okay. So now you know the difference between how much things are costing you and how much I have left over. What's probably happening right now, and I'll give you a great example. One of our first time ever getting a giant customer, right? Where it's like, oh, we got a whale, $10,000 a month. All right. Thank God we did this, but they were paying all at different times of the month. So imagine this. On the first of the month, it's your first month, you get paid $10,000. It costs you $3,000 to get that job accomplished. So you're like, yeah, I made $7,000, right? And then you're going, and then the 23rd comes and they decided to pay you early for next month. But you still have bills from this month, and now you have money in that account, and they all came in the same account. So now you got bills coming in that account and this and that, and you're paying people, and you're like, oh, I have money, I have money. You never actually know if you're profitable because you're stealing money from the month ahead of you. You're actually stealing from yourself every single time because you're spending money for this month that is actually allocated for next month. And that's what's happening right now. And most of you don't even realize it because you're sharing these accounts and you don't have an actual visual representation of how much money does my business actually have. Oh, I'm a $5 million company. Well, but we've never held more than $1 million. Okay. So that's what's happening when you mix up these accounts. So that's the first step. The first step is to have these two accounts. And instead of your sales going into an expenses account, just every month you're transferring money to that account, the amount that you know will cover all the bills. All right. You also need to have an account called profits. This profit account, about 5% of your income, is going to go into this account. And you're going to pay yourself a bonus every single quarter. This profit is very different than your paycheck. Okay. Your profit is not your paycheck. And there's a legal difference between the two. So when your money comes in, you have two accounts for paying yourself. The first one we already mentioned is called profit. The second one is going to be called owner's compensation. That's how much you pay yourself for working every single day in a business, whether your business is failing or succeeding. That's your compensation for your hourly work. Your profit is your bonus for owning a profitable and successful company. The difference on a legal standard is a lot of you are reinvesting back in your business. That's not real. You can't reinvest back in your business. You're giving yourself a loan. You're stealing from yourself. Okay, so this is why. If you take something and pay it back on your business, by definition, on legal terms, it's not profit. It went into the business, so it can't be profit. It's only profit if I spent it on vacation, if I spent it on something that has nothing to do with the business. That's a legal definition. Okay, so if I reinvest back into my business, oh, I made so much money, I'm just going to put it back into my business. Well, in the accounting world, actually, you gave yourself a loan from outside of the business. And the business has to, by law, pay you back. So every time you reinvested back into your business, when you go to your accounting person, the accounting person's gonna be like, hey, your business owes you $7,500. And you're like, what? Why? Well, because you kept reinvesting back into your business. Your business owes you this money. So now you're in debt. These are things people don't realize. You have to have these accounts separate. And you can become profitable today just by doing that. So now every 2 weeks, you're giving yourself a paycheck, and that's for working. You're giving yourself a paycheck. So your money comes in. I made $500. I made $1,000. I made $200. And now 2 weeks have passed. All that money has come into that income account. And once that 2 weeks has passed, I like to do it on the 10th and the 25th. I'll explain why later. And then on the 10th, I take everything that's in the income account and it gets distributed. Operating expenses to pay all my bills, profit, obviously, to have savings for profit, owner's compensation to pay myself for my daily work, and then, of course, taxes, an account called taxes, because you have to pay your taxes. And you can have your business pay your taxes instead of you paying your taxes. How good would it feel if at the end of the year, you're like, oh my God, tax time this year, I got to figure all this out. No, you have an account called taxes with, let's just say, my first year doing profits first. Okay. We were only making $30,000 at the time that year. Just making profits first, we were able to reduce our expenses by 40, 50%. And because of that, we were able to get to $107,000 that first year. By the end of the year, and we started 6 months into the year doing profits first, by the end of the year, we had $20,000 inside of our tax account. And we go to do taxes, and our taxes were $6,000. So I just had a gigantic profit bonus. And that's my business taxes and my personal taxes. So our business is paying all of the taxes, our taxes and the company's taxes, simply by just putting it away. 15%. It should already be calculated into your pricing. If it's not calculated into your pricing, you're going to struggle in business. Okay. So that's the beauty of this is what happens is you can automate all of this. So now we're just going to say over this month, I made $10,000. We'll do a nice even number, right? So $10,000. And so on the 25th, let's just say my money went into my operating expenses so I can pay my bills. My money went to pay myself so I can give myself a paycheck. I have money put away for profits and I have money put away for taxes. And every quarter, I get to give myself and any other owners a bonus. And it happens every quarter, we get a bonus. And we keep half the money in there just for emergencies. It's automated using a company called Relay Financial. That's a bank. It's just an online bank. Another bank called Novo. It's just an online bank. And what happens is it automatically distributes that money for me. So I don't have to think about it. So as soon as I get $1,000, 100 of it goes here, 500 goes here, 300 goes here. And then every 2 weeks, and I'm going to explain why now, is when I start paying myself and I start paying my bills. All your bills are going to be due somewhere around the 1st or the 15th. So instead of paying on the 1st and the 15th, what you do is you gather up and determine what bills you have that come after the 25th, like the 1st, the bills that are around the 1st, And on the 25th, you pay all of those bills. Now, if all of your bills are paid on the 25th, I now know exactly how much money I'm allowed to spend over the next 2 weeks, or I will go broke. That's the beauty of this. I literally have an exact number. How much can I spend in the next 2 weeks? Otherwise, I'll go broke. And don't spend all of it. So that the next month, you have just a little bit more as the baseline, and then just a little bit more as the baseline. And now let's just say your operating expenses, now you're just making slightly more sales. And last month you had $1,000 in it. And the month before that, you had $1,000 in it. And the month before that, you had $1,000 in it. You're like, oh, I have $1,000 every month extra that I can afford to buy an employee, to get a new tool. So that's how you know you can afford something new. Because for the last 3 months in a row, I had a leftover this amount of money. Everything becomes predictable. You always know how much money you're going to have. You always know how much money you can spend. You always have a profit. You always have a paycheck. Okay. Once again, when I started this, I joined my buddies, Drew and Gabriel. I had my own thing. We decided to combine forces. Drew and Gabe didn't have the knowledge of accounting and business finances and stuff like that, right? So all they were doing is just killing it. They were making sales, and then just figuring it out. And it was all in one account and it was great. And they're like, oh yeah, we're making money, right? But they paid themselves sporadically. Maybe they'd pay themselves once in a month. Maybe they'd wait 2 months, and then they would just empty out the bank account and just say, oh, we haven't paid ourselves, and they just take random things, right? And so they're like, no, we're in profit. We're in profit. And then when I actually broke down the numbers and I looked, it showed that we were in profit by $60. This whole time we're like, oh man, we're this amazing business. We did it, right? $60. That means we were just, right? That meant one bill and we weren't in profit anymore. Just one, if as soon as one bill came in, we weren't in profit. And as soon as I implemented this, as soon as I implemented this, things started to change. The first month is the hardest because it doesn't make sense on the bills at first and when to pay them and when to pay myself. And all the money's not in here. You just have to do it anyway, because after month one, then it makes a little bit more sense. And by month three, it's just a beautiful systemized machine. You get paid, it automatically allocates it to who else has to be paid, which is your bills, yourself, your taxes, and your profit automatically. Some of you are doing ads. You need an ad account. Some of you are managing other people's money because you're doing things like ads or whatever. You make an account called Other People's Money. Don't mix it with your money. It's not yours. Don't touch it. Stop doing that. That's how you're going to become broke, especially if you're managing other people's money. If they're not putting their credit card for those ads in, instead they're giving you the money, right? Where are you putting that money? Are you mixing it with your bills? Because if you are, you have no idea if it's stealing from that project, because every project is allocated a certain amount. And let's go to another business to understand. We all eat at restaurants. Just for some understanding for everyone who watches this video, I've gone to college for 7 different degrees. Okay, I just love school. One of the things I went to school for was culinary school. It was one of the hardest things I ever did. One of the hardest classes I've ever taken in my life was menu planning, in which we had to design a whole restaurant from the beginning of the class to the end of the class. All the safety procedures, the menu pricing. I had to go to the supermarket and find out everything down to the grain of salt. And I'm going to tell you why you need to do everything down to the grain of salt, using a kitchen as an example. When you make a menu, okay, when you want to start a restaurant, the first thing you do is you want to pick the location, right? So back in the day, you would go in front of the place that you wanted to buy, and maybe you'd start counting all the people that walk by, and you'd be like, women, one family, one man, older couple, younger couple. And be like, okay, there's way more old people here. There's way more younger people here. So if you're trying to start a high class fancy restaurant, but everyone that's walked past is a 21 college-year-old student, you would probably pick somewhere else. Notice what changed your demographic was your menu. Your menu came first. Second, you need to create a kitchen. So I go to create a kitchen, I'm creating a pizza place. Well, a pizza place specifically needs by law a grease trap. And it specifically needs like a brick oven, right? Which might be different than a place that needs fryers. And so the kitchen is specifically arranged to perfectly balance the menu. Always. So if I'm doing a fine dining restaurant, this is where I'm cooking the filet mignons. This is where I'm cooking this is the fish station. Same thing. And you calculate everything down to the grain of salt. Everything is based off the menu. Everything, your whole business. And if you never priced out your menu, that's probably a big reason some of you are struggling, because you're randomly throwing out prices and haven't figured out how much it costs you to run something. This is how much it costs you to run something. Okay? 30%. For every $1,000 that I spent or I made, it should only cost me max 30% of that. So $300. So if I sell a $1,000 website, I'm not going to do it myself. The most I want to spend is $300. But let's take that even further. I'm going to outsource it. All right. If I'm going to outsource it, let's do it at 20%. Let's not spend more than 20%. Then that leftover 10% that I mentioned earlier, keep that just in case you need tools internally to make that succeed. So I hire VAs to build a website for me, and they're doing all the stuff and they're doing everything. And then they're like, oh, this is, absolutely amazing, but I need this plugin. Well, if you already spent that 30%, now you can't spend any money on the plugin. You got to get them to do it. But if you have that 10%, now you can put a little bit towards that. And everything that's left over gets to go to your own personal bills. If not, you got yourself a permanent tool forever. You see the beauty of that? So now 20% is going to that outsourcer. 10% is that just buffer for you. And then you're probably going to pay yourself around 30%. You're probably going to take about 15% and put that towards taxes. You're probably going to take about 5% towards that, put that towards your profit. Every sale you make should have a number designated to it. Okay. In a restaurant, it's a little different. It's all over the place. So they aim for 30% to 32% total, meaning soda cost them 10 cents, but they're selling it for $3. So they're making 1,000% markup, right? But that steak, they only made maybe a 2% markup on. So they're aiming for total after they've sold everything a certain amount. It's easier with us. It's way easier as marketers. You know what I mean? It's so much easier. $500, $1,000, $2,000, right? It's not crazy, $2.30 and crazy markups. The markups are pretty obvious. So determine the pricing. How much does it cost me to get this job done? And down to the grain of salt. What does that mean, down to the grain of salt? I don't care if I work from my home. I'm counting my electricity. I don't care if I work from home. I'm counting my Wi-Fi. I'm still counting my cell phone bill. I want those counted into my bills just because I want to make sure that everything covers everything. When I go to McDonald's, they calculated a napkin into the burger. The ketchup, the knife, the fork, and the straw is calculated into every burger, into every single order of fries. It's already calculated in there. You need to be doing the same thing. Once you do this, everything will just become predictable. If you got 3 packages and it costs me 200 to do this package and 500 to run this package and 600 to run this package, you also know how much you make every single time and how much you're going to have for other projects and other things that you're doing. This is the beauty. This is called the profits first system. This system is thousands of years old. It is one of the very, very first systems that we did with money. It was changed later on. It's become popular again because of a book called Profits First. All right, so you can read that book at any time. I'm not giving you, any new information. I'm teaching you how to structure and what it did for us. If you have any questions, feel free to start asking those questions at any time. But I wanted to talk a little bit about pricing this time because I realized that's every time I talk about this, people are like, okay, that's cool. Is there a secret to pricing? Yes, there is. And that's the secret. So there is one step before all this though. And that's kind of just giving yourself a little audit. Okay. How much money went in those accounts in the last 3 months? For most of you, it's going to be 70% went into your expenses and 30% you took directly to your pocket. And you're going to say 0 in profit and 0, right? So this is what you're going to do. When we started our company, or when I started Profits First in our company at the time, 77% of our money was going to expenses. All right. And the rest, every other penny, went into paying the owners. All right. So, well, what did we need to do? Well, I needed to get some money in profits. I needed to get money in taxes. But as of right now, you're like, well, I can't do that. I need every penny I'm spending. So the way you're going to do it is 1% at a time. So first things first is I went in and I removed every single piece of expenses that I didn't need. I was paying for Calendly and Go High Level, and then I had Acuity, and I had Grasshopper for phones, and I had, right, I had like 30 something programs, and almost every program had at least 5 of the same things, right? Almost all of them did some kind of email, or all of them had a calendar, right? So here I am with 4 programs that have calendars in it. So that's the first thing I did. Step 1, remove every single unnecessary expense. Okay. So you can get that number from your 77% as low as possible. And at that time, I got it to like 50 something percent. It was like 53%. We were able to remove 20% of our expenses just from that. Well, that 20%, I was able to immediately allocate to those other places. So let's just say I did 5% for profit, and then I put 5% inside of taxes, and then I put 5% more to paying ourselves, right? So however you want. That's the first step. Now you've gotten your number from some crazy number, 77, to let's just say 53. Well, the next step is then you're just gonna automatically, whatever your new percentage is, that next month you're gonna start automatically putting it in there. And every 3 months, after every 3 months, you're gonna go up one profit for each month, 1% for each month, in whichever categories makes the most sense for you. If you can find out, so you, let's say, for example, you're like, okay, I'm going to remove 1% from expenses. You're going to add that 1% to another account, paying yourself, profits, whatever. Okay. And then you're going to have to learn how to survive off of 52%. In 6 months, we were able to bring it down to like 48% expenses. Eventually, we brought it down to like 30 something percent. And then we started growing again. And then I was able to pay myself less so I can pay employees more, but I was still making more money because everything's a percentage. All right. That's the beauty of this. And then you get to transition. The transition is beautiful because what's happening is once you get big enough, you start taking money out of owners' compensation instead, because it's okay. Before you were taking, let's just say 20%, before you were taking 20% of $1,000, right? Now you're just taking 10% of $10,000. You take that extra for that you were paying yourself and you put it into paying other people. So you give yourself more profit, pay yourself more less owner's expenses, and give yourself more operating expenses. So all that's happening is every single month you're adjusting percentages by 1%, 2%, and learning to survive in those. You never want to go backwards, only forwards. That's why we're doing 1% at a time. So it's manageable. You can figure out how to survive with 1% less, right? So, and what's beautiful about this is you start finding really, really, really clever ways to start lowering your expenses as much as possible. And you start making way more money because your focus isn't about making more money, it's about keeping it. Stop worrying about making more money. If you're already making money, even if it's not a lot, stop worrying about making more money and start learning how to organize your money in a way that it works for you. That's the difference. All right. Another really important thing I think I want to notice, and once again, at any time, feel free to jump in and ask any questions. But once you break the rules, you'll keep breaking the rules. So once you decide to do this, commit to it. And what do I mean by that? What I mean by that is, oh man, I got a $60 bill and I got to pay it today. I have $500 in profit. I have $500 in taxes. I have $500 in owner's expenses. Maybe I should just take the money out of that account to pay this bill. No. Figure out a way to do it without breaking the rules. Because I promise you, once you break into that taxes account once, you'll keep breaking into it. Once you break into that profit account once, you'll keep breaking into it. Okay, so you don't do that. Never destroy the integrity of the accounts. You make an account for something, you keep it. Some of you are going to have marketing accounts, and I mean like internal marketing. You're all doing marketing. How many of you are paying another company to do your marketing, right? So you might have an account for marketing once you get big enough. That's technically an expenses account. So like I said, some of you might have other people's money. All right. Some of you, and this is a great suggestion, is once your profit gets big enough, you create a vault account, an account that's for emergencies with specific designated rules on when you can spend it. I can only spend this money if after 2 months this has happened and a collapse here happened, right? It's specific rules. So there's as many different accounts as you want that make sense for your business. The most important being those fundamentals. An account called income that money bills never come out of. Account called expenses that sales never go into. An account to pay your taxes. An account to pay yourself. An account to put away for profit. Everything else is an addition to that. So give yourself an audit. How much did you put away in your profit account in the last 3 months? 0. How much did you put away in your taxes account? Right? How much did I pay myself? Some of you are going to realize maybe you paid yourself 70% of the money and only spent 30% of the money in the business. And if all you did was put more money in the business, that would be successful. While other of you might be like, wow, I'm paying myself way too much because 70% of, or not enough. 70% is way too much money to be paying yourself. Okay. 10% is way too little to be paying yourself. So at a company, most of your sizes, it's probably going to be about 50% starting off for a brand new business. You're probably going to take 50% for you, 50% for your business. Okay. My business right now, after, many years, once we broke past, if I remember correctly, it was once we broke past 150,000 and we were getting towards 200,000. That's when we brought ourselves to about 30% expenses. Paying ourselves, so we're paying ourselves less so that the business can make more money. But we're still making more money because the business is making more money and we're paying ourselves out of percentages. That's the beauty of it. Ever since we've started this, we've guaranteed ourselves a paycheck every 2 weeks, ever since. Ever since we've started this, even in our horrible, worst possible months, we've been in profit. Like to the point where our accountant, when we hired a professional accountant, she was completely confused on how we're able to do that. And once we started Profits First, I have the number. At the end of the year, our business held on to 62% of the money. That means 62% of the money that went into our business stayed in our hands. Could you imagine how amazing that would be for you? That's an insane amount. Like for any of you that don't know, that's an insane amount for a business. And before it was $60. We only had $60 more until we started Profits First. And we had 62% more by the end of the year. By the next year, I think the next year we hit 300,000 and we kept 62% of our money. So that's the beauty of these things. It's just keeping it predictable for you. And it's really easy to do, but it's also just as easy not to do. So start on it right away. All right. Let me see what other notes I have here. Okay. So those bank accounts we already talked about, Relay and Novo. So Relay is an example. So Relay will let you make up to 20 bank accounts inside of it, and you can assign a virtual or debit card to every single account or don't assign one to it. That's the cool part of it. And then you can make automatic rules so that once a month, twice a month, every single time you get paid, it automatically distributes it into those accounts. Okay. I'm going to suggest you let your owner's compensation build up every 2 weeks before you pay yourself. It's nice to give yourself that paycheck. That's not a rule. You don't have to do that. That's something I've done because when you work in corporate and other businesses, they pay you every 2 weeks. And it's something you can easily get used to rather than just paying yourself every single day and maybe get a $37 paycheck today and then you get a $537 paycheck tomorrow, right? You can build it up and see what's happening. And you'll get a literal visual representation of what's going on in your business. And that's what's probably the struggle for a lot of you businesses right now is just there's no visual representation of what's actually happening. Money's coming in and money's coming out, and so you think you're in profit. But there's a good chance either you're not in profit or you're just breaking even. Because that's how you're spending your money. You're spending your money to break even. So keep as much money as you possibly can. You become worth more money, right? You become worth more money. And the beauty is, for some of you that want to exit your company, and what I mean by that is sell it to another person, right? Sell it to an investor, get an investor, do venture capital. If you're doing profits first and stuff, you will be worth so much more money. Marketing companies, just in general, are already worth 4 to 6 times higher than their revenue. So right now, if you make $1 million in revenue, then you're probably worth about $4 to $6 million your company. Okay. If you want to sell your business, you have to be running your numbers. You need to know how much profit you have, and you need to be able to show how profitable you are. And just another little thing, if you do want to sell your business, get venture capitalists, get investors, things like that, some other little notes. Okay. You can't sell your business if your business comes from partnerships and referrals, because that means once you leave, your business leaves. Okay. So you cannot sell a business that's based on partnerships. You cannot sell a business that's based on referrals. All right. It has to be less than 20% of your business. You have to have a consistent form of customers coming in from 3 different ways before someone's going to buy your business. All right. And then you can only 4 to 6 times it if you're profitable. Otherwise, they're just buying a business in debt. And these are things that you can fix over time. So automate your business processes, automate your payment processes, and then automate your ability to get lead flow. And then you can sell your business for 46 times more than your revenue. Okay. So I think that's a really good note to have. Or just get an investor if you want an investor. If you want capital, capital for your business from an outside source, that's the way to do it. If you want to go to a bank, that's the way to do it. Show them you're profitable. Just having $5 in profit shows that they can loan you money because you can manage your money. And so if all you do right now is take money out of your account and put it in a profit account right now, you're going to be profitable as long as you don't touch it. So that's how you do it today. These are the steps to do. Make those accounts. Start transferring that money. Right.
Now, Matt, can you go through those once more? You said a tax, right? Profit, expenses, owner's comp. And then for those, I think it's a great idea, like how you said, instead of making it a fixed amount, make it a percentage amount, and you'll be able to hit all those, like check those off. And I think that was a mind shift that I did even for myself personally. It's not necessarily a fixed amount. If you can switch the mindset to a percentage amount. And I love that idea that now on your stuff, once it comes in, it gets dispersed with the rules automatically.
Automatically. So
Yes.
it comes into my income account and it waits till the end of the business day. At the end of the business day, it automatically transfers I'm going to try to give you my percentages. I have 3 owners, so that's what makes it a little hard for us, and it makes it a little bit different. We have to split our profits account, and we have to split our owner's compensation. So our owner's compensation is at 36%. That's how much the owner is paying himself. In our case, 3 people. So 12, 12, 12. That's how much we're taking. Okay. Then we're taking 5% for profit. And then we're taking 15% from taxes. So we got 20% there. And then those 36%. All right, so that's that 56%. And then everything left over is going into our operating expenses. How do I pay my outsourcers? I started another account called Other People's Money. Okay. And I take 20% of every sale instantly that's going to go into the expenses account. 20% of what's going to go into the expenses account. This one I have to do manually. And I just put it in other people's money. That way I know this guy paid me for this job. I need to spend, or I have this much to spend on it. And so that it's not getting mixed up with my bills. So that's how I do that. And I've been doing that one for a few months. So you might have your own way to do that one. We are using Relay. I used to use Novo. The difference between the two is that Novo doesn't automatically split, you split it yourself. And then the other difference is Relay lets you make an individual bank card for every single one, and Novo just gives you one bank card. So that's the difference. So I might have a referral for that.
That's kind of cool because I know it makes my life easier when you auto your tools, put it in this specific one, you know how much that is every month, right? Especially stuff going out
Yeah.
for sure. That and then you can see if it's hitting a particular card, you know it's tied into a particular category and gives you like Matt was saying that visualization, which is great.
Exactly. Let me see if I have it here. I have a very old profit allocation thing. Let's see. It's great because you can see what I had done, but it's not accurate at all anymore. But it was accurate when I first did it that first year. So you can see what happened that first year if it's here. So this is an inside look that I don't know if I should be showing, but we're going to do it anyway. Go ahead and give me permission to share. All right. And we'll just do this quick. Okay, so being a numbers person, I wanted to start calculating everything. And so I started calculating our sales, our revenue, right? So we only made 2,700 that month. And so this was how much I paid myself, 325. Then I paid myself 325. So I made 650. And then the next month, right? 5,600, 9,500, 6,100. So we had good months. We had bad months until we made it all the way to what was it? $104,000 that year. That was the year, that first year, where we had only made $30,000 and we had made $30,000 the year before and we were stuck and we were worried that we weren't going to make much more. And then as soon as we did profits first, we tripled. And then we ended up tripling again the next year. And then I don't remember how much the next year, and it just kept going. So we started keeping all this stuff and it was according to these allocations that I set up, right? 30%, 50% were the goals. And I slowly was moving to my goal of 30% and my goal of 50% and my goal of 15%, one at a time. So I was at 48%, 36%, right? And then every 3 months, I kind of adjusted this. And I did this with health assessments. I gave myself a health assessment. How much money did I actually make, right? That quarter, $80,000. Oh, this was our second bigger year, right? How much did it cost us? What was my real revenue? It's $55,000 because I had to pay outsourcing of $25,000. So my profit was 3,100. My owner's compensation I paid myself that year was $23,000. I saved $6,400 in taxes. Oh, this quarter, that's this quarter, not this. That was that quarter, sorry. Operating expenses. I had by the end of that I had $22,600. Because of that, I was like, all right, this is what I have, and these are my goals. So my goal was 55,633. I did 55,634. My goal here was 2,781. I saved 3,100. That means I put a little bit too much there, right? My goal was 27,000 in owner's compensation. I only paid myself 23,000, right? So I had goals and then what I did, and then the next quarter. So what I did in order to do this simply was I went to my bank account, my current bank account, and I went to every single thing in the month and I marked it. Of course, personal expense, business expense, because at the time we were mixing them. Okay, don't do that. So personal expense, business expense, and then mark off every single one that was an expense and every single one that was something I paid myself. And if some of you are putting away for taxes or profit, how much you put there. And then you see what would be healthy. And so once again, healthy for a brand new business is you're going to pay yourself 50%. Okay. For $250,000, you're going to pay yourself 30%. That's owner's compensation. Taxes is always going to be 15%. Okay. So I determined at that point, I was at 77% and I was unhealthy. And I needed to get myself as close to possible to 50%. And that's when I told you I removed all those expenses. And as soon as I got it there, that's when you saw those months. So then I was able to play with my expenses and play with my percents and add a percent here and add a percent there until I was able to start paying myself more and more and more and have more and more in profit and more in savings. Okay. So this is actually a lot easier than regular accounting. It's way less work. It's way easier to do, and it's way more accurate. But most of you aren't going to do it. And that's the truth. And I'm just here to tell you that's perfectly fine. But I promise you that if you do, you will call me to thank me, as every other company who has ever actually done this has. Because I'm telling you, you will triple. Even my mom. My mother owns an auto company. And she's the one that told me about this book. And I started reading it and I finished it before her and I instantly implemented it and I started doing all the stuff. I had already known this stuff from other stuff, but this book was great because it told you how to do it specifically for every business, regardless of what business you have. So I was like, okay, let me try that. And our business exploded and then told my mom, and then she kept waiting and waiting and waiting. And my mother's also an accountant. And then finally, when she did it, her business exploded. All right. So this can work for anyone. And it's really, really easy to do. But like I said, what's easy to do is just as easy not to do. If you start measuring this stuff, I promise you your company will grow because what you focus on grows. If you focus on your debt, you get more debt. So some people are like, I need to fix my debt. And then they focus on their debt and they get more debt. Focus on your net worth. In this case, focus on your profit. Start focusing on the profitability of your company and your profit will grow. Start focusing on saving more money than you spend and your business will grow. That's a promise. Figure out how much every single one of your services costs you down to the grain of salt so that you stop guessing. Oh, maybe this one's $1,000 website and maybe this one's a $2,000 website. Stop doing that. Know exactly what they get for $1,000. Know exactly what they get for $2,000. Know exactly what they get for $100. Doesn't matter. They need to know exactly what they get as well. And then you'll just always know, I sell 10 of these. And if I sell 10 of these and I'm making 60% every single time because I only spent 30%, now I know exactly how much I'm going to have next month because I always sell at least 10 of these, right? This becomes profitable. But if one month you're selling it for $200 and next month you found someone who will buy it for $3,000 and you find next day you find someone who will buy it for $400 and you're just doing all these prices, it's probably really, really killing you and making it hard for you to even manage those projects in the first place. So these are all little tiny things that will drastically fix everything in your business. This tiny thing will fix so many other things inside of your business. It'll fix your fulfillment. It'll fix the way you deal with customer service. It'll fix the fact that you're probably not using most of your tools. Once I did that, I realized, oh, I have now like 4 tools and I started learning every single function of that tool, and now I'm using every single thing inside of that tool. And I didn't even realize some of these tools had those things because I didn't care. I just bought a tool for its specific thing. And now instead, I'm buying things to save myself money and still do the best possible work. So
this is good stuff, man. And what was that bank? Those 2 bank accounts, just to recap that.
Relay Financial. Let me see if I have I believe
And
I
is that
have.
the one that you can set up the virtual business card? I mean,
Yes.
ATM card.
Exactly. You can set up all the virtual business stuff. Let's see. I think there's a button in here to
That way I can get this out to our
absolutely.
members and get this part dialed in.
I know I saw it earlier, so I'll send over to you the exact link in a bit. You know, I can do that after the call.
Awesome. Great.
Right now, but it's Relay Financial. It's a bank. It's
Okay, good, good.
okay.
So, guys, we are coming up to the 60-minute mark. I want to respect everybody's time, Matt's time. It's always bombs here, guys, especially like Matthew said, if you apply this stuff, it's always bombs that Drew and Matt bring on, right? A different part of the business, right? We want to, that's one thing that Micah taught, right? Don't look at this as marketing or your side hustle. Look at it as a business owner for the long haul. This stuff is for the long haul. Like you said, Matt, you'll call and thank them later, right? There's clarity. Right now you guys are everybody's in the mix of getting their taxes ready, calling their tax guy, setting an appointment. What do I need to bring? Where is this at? Right? This kind of keeps you organized.
And every year around tax time, my company's like,
yeah, the bonus. That's right. That's right. Because you see, hey, I have 20. I know I only needed 5 or 10. The rest you get to benefit from it, right? And that's that buffer that we can put in them. So I appreciate that. I know Jonathan's cooking up a storm right now. Richard, if you guys don't have any particular questions, we're going to go ahead and call it here.
all right.
I just had a real quick question, Matthew.
Yeah, please.
And again, thanks, man. Really great stuff. Being a little bit older, my grandparents would pay yourself, but I never considered like breaking things down into like income and going that deep. And I really like what you said about calculating it down to the grain of salt. So really broaden my horizons and open my thinking. This is the first time I'm seeing you. Do you have like a YouTube channel or something or?
I do not. Most of my teachings you'll see on here, and
okay.
You can just follow me on Facebook or Instagram, Money Mystic 359.
Money Mystic. Okay, cool. Yeah.
Well, we're doing other things on our other channels.
Nice, awesome. Well, I really enjoyed it, and again, thank you so much for coming on and sharing that with us.
I guess I can do one more plug. I am an author, and I teach this exact same philosophy for your personal expenses. It's a book called Never Be Poor Again, A Guide to Money as a Spiritual Practice. And it's where I teach you all the laws of money, kind of like we were just teaching, but for your personal finances. But the way I teach you is by showing you me learning it and then not listening to any of the rules and then being broke and then trying it again and then becoming broke and then trying it again and becoming broke until I finally understood the process and the recipe. And so I give that whole recipe and show you how I got out of being extremely poor, because that's what I was. I was extremely, extremely poor before. So.
And the name of the book again was Never Be Poor Again?
Never Be Poor Again, A Guide to Money as a Spiritual Practice. That's on Amazon.
Yeah, great stuff. Appreciate you. Richard said, or Jonathan said it's fire. I appreciate this, guys. And yes, the replay is going to be out there. Again, Drew and Matthew always bring some cool knowledge, different perspective into our marketing world. I don't think we get enough of this stuff as we should. So with that being said, guys, I appreciate you. We'll see Matthew and Drew hopefully in a couple of weeks. Thank you once again, guys. I have a YouTube channel, Evergreen SEO with Alfredo. Make sure you're on William Jones' YouTube channel as well. Share that love on there with the likes and support and listens and views. Matthew's book as well. I appreciate everyone. With that being said, guys, much love, much success, and I'll catch you on the next one.